Hey, welcome. Whenever the markets get shaky, everybody immediately points to the big headlines. But are those obvious stories the real drivers? In this explainer, we're going to look past all that noise and try to uncover the forces that could actually be moving the markets. Okay, let's get into it.
So let's start with the big one, right? The question we all need to ask is, what's the single biggest threat to the financial markets at this very moment? And I'll tell you, the answer, it might not be what you're thinking.
Is it the geopolitical drama we see splashed across the news every single day? Or is it something quieter, something more technical, happening deep inside the world's most powerful central bank, the U.S. Federal Reserve? We're going to break down both sides of this. All right, so first up, let's tackle that geopolitical story. The conflict involving Iran has been front and center, and look, it's an easy scapegoat for why the markets are nervous. But does the data actually back that up as the main reason to be worried?
When you look at how markets have reacted to conflicts throughout history, a really clear pattern starts to show up. Usually, the S&P 500 takes a hit, maybe a 10 to 15% drop. But, and this is so important, those drops have almost always turned out to be a buying opportunity. It's like we've seen this movie before, and right now, it looks like the market is following the script perfectly, which suggests we might have already hit the bottom of this particular dip.
And this right here, this really gets to the core of it. I mean, if this conflict were a true system-wide threat, you'd see it in the data. But look, inflation expectations are holding steady. U.S. bond yields actually turned back down from a key level. And even the price of oil, after that initial spike, has reversed course. These just aren't the signs of a spiraling economic crisis. So what we saw instead was really a crisis of confidence. Last week's American Association of Individual Investors survey, it showed that a whopping 51% of investors were bearish. They were pessimistic. Now, that level of fear is usually what we call a contrarian indicator. It often means the panic itself has peaked, not the actual danger. So if the headlines about war aren't the real long-term danger, what is? Well, for that, we need to turn to a much quieter story, a potential threat that's kind of hiding in plain sight, right inside the Federal Reserve. And the clue is right here, in this document published not too long ago by the Fed's own staff. The title is pretty dry, a guide for reducing the Fed's balance sheet. But trust me, what's inside is way more concerning than any headline about missiles or oil tankers. The key thing to understand here is just the sheer scale of what they're talking about. The paper lays out a potential scenario for shrinking the Fed's balance sheet by up to $2.1 trillion. That is a mind-bogglingly huge amount of money to pull out of the system. So, how would this even work? Well, think of it like pulling the plug on a swimming pool. The Fed starts selling off its government debt, and the cash that's used to buy that debt gets sucked directly out of the banking system. The result? Bank reserves shrink, which makes it harder and more expensive for pretty much everyone to get a loan. And this chart just shows you how dramatic the impact could be. Right now, U.S. banks have around $3 trillion in reserves. If you yank $2.1 trillion of that out, they're left with less than $1 trillion. A liquidity drain of that magnitude could slam the brakes on the entire economy hard. But here's the twist, and this is really important. Even the people who wrote the report seem to know this is a nuclear option. They themselves note that actually doing this is, and I quote, unthinkable right now. And why is that? Well, because in a world that is just swimming in debt after the pandemic, you absolutely need liquidity to keep the whole system going. Pulling this much out could trigger a serious breakdown. So this brings us to a really fascinating and definitely contrarian idea. If the conflict isn't the main economic threat and the Fed's huge plan is just a thought experiment, well, could the geopolitical situation just be a convenient cover for something else? Some analysts out there are arguing that it's all part of an economic power play. Let's look at what this argument is based on. The people who hold this view, they point to a few key things. For instance, disruptions in helium exports really hurt Asian chipmakers, right? Well, the US just happens to be the world's top producer of helium. Or take fertilizers. Disruptions hit India's farmers, which can create a new market for US agriculture. And when the supply of methanol gets tight for South Korea, China, and Japan, American producers suddenly have a lot less competition. And the theory doesn't stop there. Higher oil prices? They're great for U.S. energy company profits, which could then fund other projects, like rebuilding energy infrastructure in Venezuela. Also, by controlling the insurance for ships passing through the strait, the U.S. gets a whole lot of influence over who gets oil and when. And maybe most importantly, this argument says that every single day the situation drags on, Iran's position at the negotiating table gets weaker and weaker. So, what's the big takeaway here? At the end of the day, it's about the critical importance of looking past the obvious story, beyond the headlines that everyone is shouting about. The real story is almost always more complicated, and it's often hidden in the details. And sometimes the biggest clues about what's being missed aren't in some dense financial report. They're in simple, glaring mistakes that show you just how little attention is being paid to what really matters. I want to show you a perfect example of what I mean. A recent article in the New York Times talking about former President Trump referred to his threat to pull out of the North America Treaty Organization. A recent article in the New York Times talking about former President Trump referred to his threat to pull out of the North America Treaty Organization. Yeah, of course. It's the North Atlantic Treaty Organization, NATO. This wasn't a typo on Twitter. This was in a major article that went through who knows how many editors at one of the most respected newspapers on the planet.
And that really leaves us with one final and I think crucial question. If the mainstream headlines can get a basic fact like that so spectacularly wrong, what does that tell us about their ability to cover far more complex, more nuanced stories, like what's truly driving the global financial system? It's definitely something to think about. Thanks for tuning in.